of Rajasthan. Budget airline SpiceJet struggles to make headway against increasingly powerful headwinds burdened by regulatory action and deteriorating finances. The company has had to take some drastic cost-cutting measures. Madeeha Mujawar reports that with every passing day, the airline's need to raise funds is intensifying.
SpiceJet has been flying through some heavy turbulence over the last few months. While there have been some bits of headway here and there, these have been few and far between. The latest worry is a notice from NCLT Delhi on an insolvency plea by an operational creditor, Acres Buildwill, claiming outstanding dues of 3.2 crores. SpiceJet has been given 2 weeks to respond, and the NCLT is likely to hear the case on 30th September. The company's bottom line slipped into the red in FY19 before the pandemic hit. And while the stress of the next 2 years can be attributed to the pandemic, it has continued to struggle even after the lockdowns were lifted. The company has attributed a lot of this stress to rising fuel costs and a depreciating rupee, and has resorted to some drastic measures to right the ship. These range from applying for and receiving the first tranche of disbursements under the government's Emergency Credit Line Guarantee Scheme. It plans to use this money to partially clear statutory dues like TDS and Employee Provident Fund obligations and payments to aircraft lessors. Vital, since reports suggest a few lessors are looking at approaching the DGCA to deregister their aircraft. A second tranche under the ECLGS is expected soon, but experts say this will not be enough.
Spice, by our estimates, will need anywhere from 1,200 to 1,500 crores at the very minimum. So if they come out with an item saying, we've got 200 crores, that's just a drop in the bucket.
Rising expenses and falling revenues have forced the airline to also send at least 80 pilots on leave without pay for 3 months, promising to recall them once more aircraft are inducted into its fleet. The aviation regulator DGCA has extended restrictions on SpiceJet's operations by a month, so the airline will be able to fly only 50% of its flight schedule till the 29th of October. This is being seen as a signal that unless SpiceJet manages to show adequate financial and safety resources to run operations, restrictions could be extended further.
Say it's a distressed debt provider or some other unknown investor, that sends a very different signal than, say if you have a Middle East airline coming in and investing, or if you have a strategic partner or a private equity group. Once you see that quantum of equity infusion, once you see the quality of capital coming in, it will reflect in other ways, and it will give comfort to lenders and vendors to continue to do business with the airline.
The airline, however, is confident of raising 1,600 crore rupees. In an email response to CNBC-TV18's queries, a spokesperson said, and I quote, "The company, as announced earlier, plans to raise $200 million and continues to be in discussions with various investors to secure sustainable financing." The spokesperson also added that our passenger and cargo businesses are generating adequate cash flows to cover our cost of operations. It is this profit-making cargo business, Spice Express, that the airline is looking to spin off into a separate entity, and says that process is proceeding as per plan. An independent audit report points to a complete erosion of SpiceJet's net worth, with losses climbing and debt mounting to 6,400 crores as of the 31st of August. It has also lost market share from 10.6% in January to 7.9% in August. And this has added to the worries about its future. In Mumbai, Madeeha Mujawar.
With that, it is time for us to wrap